half-point cut, Jenny, that doesn't happen very often. That suggests emergency conditions, and it doesn't. There's nothing in that jobs report today, and there's really nothing in the economic numbers that I've seen over the last few months that suggests that we are in any kind or approaching any kind of economic emergency.
We totally agree. And so the idea that there was ever going to be a 50 basis point cut in July seemed really unrealistic to me. Although the way we're thinking about the jobs numbers today this is also unsurprising, right? We look at average numbers, and and we should have all known that the jobs number would be okay, and the average for the past 3 months of jobs has been okay. So I think if the Fed's going to cut in July or September, I doubt this one number has really changed that decision. I think they're looking at other things like PMIs, which have been down and down and down and really persistently down. So if they're going to make this decision, this isn't changing their mind on it.
So, Josh, the market, the stock market, reacting a little bit negatively to this on the theory that the rate cut is less likely, a 50 basis point cut is even less likely than that. But what if the jobs number had confirmed what we saw in May, which was a very weak jobs number? Would it have been worse if the number had been worse, or would the market have reacted better?
Yeah, so I think, like, no one's embarrassed anymore. We're adults, and we're saying that it's better to be sicker and need medicine than it is to have a great jobs report and be healthy. That's the message of the market. These are adults. Is no one ashamed of anything anymore? Is this like literally the way we now invest? We say, I hope that jobs report's not so good so we can get more of that Robitussin. It is mental. And if you think that there's any reason in any of the data for a jobs report right now, then you're listening to a political source that's convinced you of that. Because if you were to say, what would a rate cut do right now? Like, if you're trying to think of, well, what's a transmission mechanism by which we cut 25 basis points and it shows up somewhere in the economy, even if you are the most optimistic about a rate cut's ability to do anything at this stage in the game, you would have to say it's 6 months before the economy feels it. So I honestly don't understand.
So you don't think we need a rate cut, period?
No, I don't understand. What? Yeah. I don't understand. And
so
how about
why
this?
Has everybody been talked into the idea that it's needed or that it ought to happen?
Because no one's embarrassed anymore. Everyone's insane. Think about, now we're going to say, so now we're back to printing 180,000 jobs on an average monthly basis again. So was the December hike a mistake still? So now you're at 3.6% unemployment, which is beyond full employment. You've got wage growth. You've got the participation rate slowly but steadily improving. You've got home prices at all-time highs. You've got virtually every asset class going up, from bonds to stocks to international, now commodities. What is the rate cut specifically designed to do? And that's before I even get into the rate at which banks are lending, or I get into financial conditions index, or I get into economic surprise index. There is absolutely no reason why anyone would say, you know what ails us? We need a rate cut. It doesn't exist.
Okay, so that's where I was about 2 weeks ago, right? We don't need this. It's like giving drugs to a drug addict.
Well, you're smarter than me, so I didn't get there till now.
But I had to really talk my way out, or really, I don't know, debate my way out of feeling the same way you did and thinking about the same thing. And part of what's drawn me into, like, maybe we do need a rate cut, or maybe it would be helpful, are things like looking at PMIs, which have been persistently negative and deteriorating. And that's actually concerning. And then when I finally got comfortable with the fact that, okay, maybe it's not just about U.S. jobs, maybe it's not just about wage growth here, and maybe it's not just domestic, maybe the Fed is looking more broadly, where I got comfortable with that was when I started to understand the difference between the dollar values of the trade war and the impact, and the fact that what the real problem with the trade war is this really bad depression on global business sentiment, right? And that's freezing up hiring, it's freezing up purchasing, it's trickling into supply chains. And so I do agree with you that the 25 basis point cut is super crude. I don't know if it works, but maybe it's all they've got.
So Jim, I'm just going to jump in with exactly what you said, because I think you hit on look, Josh, I understand and respect your outrage.
I'm not outraged.
You sounded outraged.
I can't believe we're seriously debating that a rate cut is necessary, given where the data is.
Let's leave the word necessary out, because I'll agree with you on that, okay? But let's also talk about what can happen to the stock market going forward here. And a lot of things can go wrong. We know a lot of things can go wrong. China can go off the rails. Brexit can go off the rails. We can get to a shooting war in the Middle East. But there is a trajectory here for the stock market to nicely reach new highs. Frankly, it depends on a 25 basis point cut. Whether it's necessary or not, it does depend on that, followed by, in the next 2 months, a meaningful resolution of the trade issues with China. Not just tweets, not just kicking the can down the road.